Hey guys, this is Ali Hussein from HT Team Orlando, Keller Rooms at the Parks, and I'm joined by Shaheen Wazir, our preferred lender from Christensen Financial. Welcome, Shaheen. How are you?
Good, Ali. How you been?
Good, man. Thanks for joining us today. Thanks for doing this for us.
Yeah, sure. Looking sharp.
Thank you, thank you, thank you. So, so anyway, basically what we were trying to talk about today was that the fact that you know it's obviously become a lot more challenging in the with this whole COVID-19 thing going on with the pandemic to be able to get a home mortgage. But I know from seeing your Facebook feed and everything there, it's happening. I'm seeing clear to closes and prequels, all kinds of fun stuff. So I know it's happening, and I know plenty of other people who are getting loans. So it's not that it can't be done, but there's some challenges. It's a definitely a different time period. So I'd love for you to kind of walk us through some of the things. And we have some a couple questions people did they did reach out to say, hey, I can't join, can you ask some questions? I was like, sure. So we can kind of talk through certain things and then maybe even answer a few questions for our Facebook audience.
Yeah, absolutely. Yeah, it's been really busy. It's busier than last year this time. So there's a lot of buyers out there. It's few
Wow.
sellers, but the demand is very, very solid right now, and we've been closing loans. Really challenging, even from realtors' point of view, in showing homes and safety.
Oh yeah. Actually, so from our standpoint, yeah, I mean, even like, so pre-COVID, I remember in that 250 and under price range, it was just insanity. You'd have like 12 offers you have to fight through, and you'd be lucky if you finally got one. We finally did actually get an offer accepted for, this is pre-COVID, for someone in that market, and but we did. It was a lot of work, but we got through it.
Yeah,
Um,
even hard.
well, so
Been seeing a lot of multiple offer situations, and they've been like going pending in like a day or two. Seen that many times.
yes, exactly. What I was going to say was pre-COVID. I remember in the lower price ranges, we would see this, and it wasn't unusual to see it, in the 250ish and less. We just did a over 300,000 house that was also went over asking. So it's, I
See
mean,
all the buyers out there right now. They're all serious buyers. So
exactly.
whoever is out there, they want to buy now. There's no looky looks out there, and none of those tire kickers. Everyone is serious buyers. So you've been getting offers, or getting the pre-approvals done. They've been put up.
Right, right, right.
Everything is like happening really quickly. I mean, so some of the things we're doing different is, like, there's a lot of buyers, less sellers out there, all this multiple offer situations. So we've been doing underwriting approvals upfront and loan commitments instead of just a pre-approval. So the buyer's documents, credit, income, everything is approved upfront from the underwriter, and they get a solid loan commitment upfront. So this is creating a lot of buyers that can get into the offer right away. We've been calling listing agents, even the sellers directly, and saying, hey, our buyer is already underwritten. He's ready to go. It's not just a pre-approval. So the odds of the buyers are a lot higher to get those offers accepted.
As a matter of fact, I remember last was it back in December? I think we had one close that same situation. The buyer was a strong buyer, and he was like, she was like, the listing agent like, how strong is his buyer? Is like, let me have our our loan officer call you, and he called, and she's like, wow, okay.
We've been even talking to the sellers too, and explaining them the difference between a loan commitment and just a pre-approval. So that's making a lot of difference right now as well.
Mhm. So Shane, let's talk about what's going on right now in as far as the approval process. Now, um, has it gotten a little bit more challenging? Have you seen?
It's pretty much the same for your regular W-2 buyers. Nothing's changed. In fact, a lot of the programs are a lot easier. We're doing the fast track program where they don't need a lot of documentations, just a pay stub, W-2s, no tax returns. A lot of the stuff is verified electronically, like the bank statements and stuff like that. So a lot of streamlined stuff, a lot of easier on that end. The challenge comes on self-employed buyers right now.
Okay, and we can go into that specifically. There's a lot of people inquiring about that because we had some people we had some stuff. So we'll get into that a little bit. But now, so like pre-COVID, I remember it was even the bigger hitters like your Chase National Bank. They initially were doing FHA. I remember when COVID first hit, they immediately pulled their FHA program and they moved their conventional 20% down minimum requirement, 700 minimum credit score. So, which, and it's not even like that was a new requirement. They were pulling people out like a couple days before closing, be like, oh, well, our guidelines changed, so therefore you don't qualify anymore unless you can come up with an extra 17% down. So,
last couple of months.
So, but I mean, so where are the credit score requirements now meant for? Have FHA is Fannie Mae made any changes to that, or are they?
It's lender specific, so it's not a Fannie Mae or FHA rule as far as the credit scores. It's basically up to the lenders and the investors what risk level they want to tolerate. So
Right.
Chase made the guidelines, 700. That's a little extreme. Lenders are doing 640, 660, 680. So a lot of the lower scores below 640 are challenging right now. They can be done, but 640 is like the sweet spot right now where most lenders are accepting that and above. So
that's good to know. So 640 minimum.
Yeah, that's kind of the spot where you want to be at. We've been doing under 640 as well, but it's on a case basis. And a lot of times we can do a credit simulator and get the credit above the 640 to get them better pricing as well, and better rates and fewer conditions. So we're seeing a lot of that as well. Not as extreme like it was a couple of months ago when all this started.
Right. So tell us about the whole self-employed, because a lot of people have been asking me about that, like, oh, you know how to get self-employed done? I'm like, well, let's join our live Facebook feed. We'll talk about it.
Yeah, that's the hot topic right now. The Fannie Mae guidelines are really strict right now on self-employed buyers. Basically, they want to make sure the business is stable. The sales and expenses the sales haven't gone down. Expenses have stayed stable. So they're looking for a little more documentation to make sure the business is in good shape. So generally, you need tax returns anyways for self-employed buyers. You need two years taxes, personal and business. So for now, we also require a P&L statement for this year so far. So we know what the sales are so far for the year compared to what they were last year. So they want to make sure they are stable, they haven't gone down drastically, or if they have gone down, you're seeing a curve coming back. So they're looking for a little more scrutiny on that stuff. Right?
Well, actually, that was going to be my next question. So if your business did see a downturn, but now you're starting to get back up, does that kind of eliminate your ability to get a mortgage, or is that?
Not necessarily. That's a good thing. So they want to make sure you say you had a dip in the sales, which is understandable, but you see it's going up now. You're more stable right now. So they're looking at all those factors right now. A lot of the banks and other lenders not even doing self-employed anymore, or they don't want to do it. A lot of the banks, 3-4 months turn times, they're asking for self-employed due to the more paperwork and more scrutiny required on such lenders. But we've been doing pretty good on those. We have a streamlined feature where we collect all the documents up front, exactly what we need. We send it to the underwriter up front to make sure it looks good and do the pre-approval that way. So all the new ones are going in pretty smoothly because we've been asking for the right documentation up front from the buyers, giving them the correct expectations so they know what they need to do.
So Now, typically, you've been doing them in the past. I know. So, you're self-employed taking the same amount of time as um, as your traditional, or do we need more time from a standpoint of is
I
it
would
taking a little longer?
more time for self-employed. So
Mhm.
sometimes it takes additional stuff to get from the CPA or the accountant, like a P&L statement, bank statements for your personal and business, last 2 years tax returns. So what I encourage buyers is to get ahead of the game, get all the documentation in before you start looking for the property. So we make sure everything is looking good. I have the underwriter looking at it. We got everything in. So once you have a contract, then it's smooth sailing from that. The turn
Right.
time is also very low. They're not that long as well. It's, 2 3 days in underwriting right now, so it's pretty quick as well. But I
Oh
encourage,
wow. So you're saying that the prep time is a little bit longer to get the prequal, but once you get the prequal, there really is no difference in
yeah,
significant difference in time. Okay.
yeah. Once we get all the documents, the sooner they send it up front, we have time to review it, and anything we need, we can ask them right away. So that way, all the legwork is done beforehand. So once they have a contract, it's ready to go. We have everything already verified and all submitted. So then it's like 2 days underwriting for approval after that. So it goes
Wow.
quick as long as the buyer's on the same page and they know what to expect and get everything to us right.
Okay, great. Okay, well, let's talk about another special type of loan that I know you guys do. A few people do it, but what about the H-1B? Let's talk about that because now I noticed, not to get political, because this is not about politics, but there has been some changes to the H-1B program. Especially, it's gotten a little bit more precarious, and people are a little bit more nervous.
Mhm.
Um, how are lenders reacting to that on the loan side of things? Because I know that the initial requirement, I think you had said was last time we talked about was like as long as you have 2 years left, or there's some kind of a. So what are the like? How have the changes the H-1B program loans changed because of H-1B? I mean, sorry, because of coronavirus. That because
It's not changed as far as the guidelines. They're still the same. They still go by Fannie Mae or FHA guidelines. They just want to make sure that the employer will renew their visa once before it expires, just like before. So it's the same way. Nothing's changed on as far as any guidelines so far on that. It's always been the case where they always verify with the employer that say if they have 1 year or 2 years left on their visa to make sure they will continue the employment and it will be renewed. So that's what we've been doing quite a few of those as well right now.
oh, okay. So then, well, what about the fact that there's now the talk of potentially where the H-1Bs may not get renewed or they may end the program or all kinds of rumors and stuff that we've been hearing. I mean, so that hasn't affected the programs in any way, right? The loan programs?
Far, nothing has been affected. But like I said, if the employer won't renew or won't know if they will renew their visa, then that could be an issue. But
Right.
as long
Okay.
as they have 2 3 years left on the visa and the employment is stable, then it's the same guidelines that were before. So nothing's changed on that end. Hopefully, it stays that way.
Yeah. So I saw something about this 2-day approval thing. How does that work? Because it sounds a little. It's I've heard of like 1 week to to underwrite like 1 week through the process and 2 weeks. You've done. I've seen some 2 week clear to closes. But so how? What's this 2-day thing? I'm intrigued.
It's a 2 day underwriting approval. So once we submit the loan, it's maximum 2 days to get the approval from the underwriters. So we try to encourage buyers to get all the documents in up front, as much as they can with the income documents, the assets, everything in. Submit a full file, and it's still 2 days, 10 times on approval. So
Wow.
yeah, it's pretty.
And then how then from and then so then you would do that prior to putting in an offer
No, this
or
is afterwards. Yeah, this is
after? Oh wow.
once we have the contract and
Okay.
we have all the documentation from the buyer, we submit it to underwriting, and we get an approval or loan commitment in 2 days. So they're pretty quick right now.
That's
A lot
that's
of the
pretty quick. Yeah. Wow.
2 weeks.
Okay. A couple of other little things, and then we've got also some buyer questions too that were interesting. Um, okay. So now, and this is very COVID specific now. So I've heard a lot about, okay, now that to avoid this big bubble that burst in 2008, the mortgage the loan officers are being a lot more, or the services rather, are being a lot more open to working with the buyers or the purchasers once it's approved and they're already on their own and they're like they have an existing loan, with forbearance and what is the other one is forbearance and deferment. So there's two different things but then I've also heard all kinds of crazy rumors about how sometimes I've even heard that well, actually I've heard that it dings your credit. It will it'll prevent you from refinancing. It'll prevent you from buying a new loan. So what is the story behind you know deferment versus forbearance, if you can explain that, and then also how does that affect the credit and also the ability to get a future loan?
Okay, so what I get a lot of those questions lately is all kinds of buyers have been asking about.
Yes.
I always always tell them that should be your last resort, the forbearance. If you can pay your mortgage, do that first. Maybe defer some other bills like your car payments or credit cards. The mortgage should be the last option. If you are unable to pay, then of course that program is there. Now you got to check with the lender to see exactly how it's going to work. It's not always the best option, you know. Like your forbearance, your general plan is, 3 months, you don't have to make a payment. It's either 3 or 6 months, but on the fourth month, you have 4 payments due. So make sure,
Wait, wow.
yeah, so it's make sure, you know exactly what kind of program you're getting into. The deferment is they can put the mortgage payments on the back end. So
Okay.
that's another option. But most common one is the 3 months forbearance. But fourth month you have 4 payments due. So you gotta make sure you have the funds available for that, or they can spread it out over 12 months, and then your payments will be higher for the next 12 months. So I
Oh,
always
wow.
tell them to look into that carefully, make sure that's the way you want to go and educate yourself. And then, like you said, if they're looking to either buy another house or do a refinance, that would not be possible if they are in a forbearance plan right now.
Okay, but what if they're not in forbearance, but they've actually, they've gotten out of forbearance or they've gotten out of deferment, they're back on their feet.
Mhm.
But now I've also heard though that because of the credit report, what it shows on there as those forbearances and all, are your lenders or like your Fannie Mae and Freddie Mac, are they saying, okay, if you've had one of these, you have a certain amount of time you have to wait before you can apply for that again, or what's the guidelines right now?
Exactly. They want to make sure that the mortgage is current right now. So say you were in a forbearance and you're
Mhm.
out of it right now, you current in all your payments. They want to make sure you have 3 payments in before you would be eligible for either a refinance or a new loan after that. So
So
they,
so 3 months, whether it's post deferment or forbearance. Now, what about the actual credit score itself or the credit report? Um, do you know how those are being reported, and does that negatively affect, like, are they lenders now that are going to say, well, because you had forbearance, you're not going to be able to get a loan now, or what's the story? I mean, can they deny you because of that, or is it?
yeah, it's possible. They're going to look at, why you went into forbearance, if you had a dip in the income, and then if you're back on your feet now, then that would be something they would look at as well. As
Right.
far as the credit, I've been seeing different things. I've been seeing where the mortgage has been reported late, which it shouldn't be if you're in the forbearance program. But I've had buyers where they have seen that happen as well. So you want to check with your lender to make sure how it's going to be reported on your credit report, because that could make a difference. And
Right, right.
the wordings, in forbearance plan on the credit report as well. And I've seen late payments as well. So before you sign up for those programs, encourage them to ask the lender how it's going to affect the credit. It
Right.
shouldn't report late, but it's up to the lenders how they actually report it. So that would be something I would definitely look into that, especially if you're considering a refinance or getting another mortgage in the future. That could definitely affect your chances as well.
Okay, good. Thank you. That's great information. Let's see. What else do we have? See some buyer questions. I know. Oh, actually, I had heard another thing. Sorry, man, my screen just disappeared. There we go. Okay.
All right.
So I also heard another thing, Shaheen, is that some lender, some credit, loan companies, the servicers, even if you were to go ahead and just like even if you were to say, hey, I'm curious to see what is this whole program? I mean, how does it actually work with forbearance and they're actually in some cases even dinging their credit report just for even asking about it.
Oh, really? Wow.
Yeah. I don't know who's doing it or how that
I've
specifically
been seeing
works, but
a lot of the lenders have been just giving them the forbearance automatically without them even asking for it. It's just there, like you're approved for a forbearance. You don't have to make payment for the next 3 or 6 months. So I always say look into that. Don't always get into that. It's not always the best options. Do your research, do your homework, and make sure that's really you want to do.
right. No, that's good. Let's see. Okay, so a couple of questions from our viewers. That well, actually, one of the ones was the whole forbearance to deferment stuff. So here's a great question. Also, now obviously with the COVID losses and layoffs and things, people are many times in like really good positions, and massive, larger companies be like, all right, I need to cut this amount of money, and so everyone is, these bigger people are cut, or even let's say you're in a stable hospitality job or any of that stuff, so you lost your position now, and now you've been laid off. A couple months go down the line, you're now restored, you're back in position, things, you're stable. What is that now? Assuming your credit didn't take a dip, which some people did, but assuming your credit didn't take as much of a dip, what about for you as a like as a lender? How are you guys looking at that? The fact that they had a dip because of COVID. Are you guys looking into that? Uh, is it harder to get a loan post COVID? Post a COVID layoff, or is it still possible? Or what if you were in the middle of the loan process and you had to leave, but now you're back in? Does that mean you're going to have to wait for a while, or what's the story behind that?
Yeah, we've been seeing, unfortunately, a lot of those instances last couple of months. And then we also been seeing a lot of the people that have been laid off are back again at work now, which is a
Mm-hmm.
great thing as well. So mostly they look for, 30 days if you're laid off and then now you're back on the job. They're looking for 30 days of pay stubs to make sure you're back on track and you're making the same as you were before and things are proceeding along. So that's what they're looking at. If you're furloughed, then unfortunately you can get a loan at that time. But if you're back at work, then that's awesome. You can go from there. Or if you got a new job, hopefully in the same field, or if it's a full-time job and a stable job, that's fine too. You don't have to wait 2 years to in that particular job to get a mortgage. It's all looked at on a case basis.
Okay, so then it's not like they're suddenly going to go, oh, well, you lost your job during the middle of the pandemic, so therefore you're going to have to wait 9 months or a month or 3 months or 6 months or something like that.
Yeah, not necessarily. If you are rehired again, we've had that situation where they were rehired, and it's we verified with the employer. Now they're back on full time. It's permanent job. Be good to go. They're not stable yet, so they got another job, but it's not in the same field or it's part time. They may want them to wait a few months to make sure it's stable and they can count on that income consistently. So it just depends on the individual. Each scenario is a little bit different to me, but that's what we do. Try to get that information up front so we can give them the right answers on whether they'll get pre-approved right away or they have to wait a few months down the road to get that.
Awesome, man. It's a lot of good information here today. Thank you. So anyway, yeah. So Shaheen Wazir, he's from Christensen Financial. We'll go ahead and post his information in the post. It'll also be the Facebook Live here will also be shared. We'll make a copy of it and share it on YouTube as well. So definitely we will get the information out there, and yeah, we'll have all of his information as well as ours. You can find our YouTube channel, just hashtag HQ Team Orlando for more information. And hopefully this was informative. Thank you guys all for the questions that you guys sent me prior to this live program here. Oh, one more final question. I almost forgot this. So what is the story with is there a new FICO system or a new FICO changes coming? I've been hearing about this, and then I've heard no, it's not. Yes, it is. I'm like, let me ask Shaheen about this. This is going to be interesting. So
it's there already. It's already in place. Basically, you're seeing more reporting on the scores. We're seeing the accounts. The history has been reported more for a longer period of time. There's changes as far as the account balances on what they were on a longer period of time. So there's a lot more information on that right now as far as the FICO.
right.
Easier to calculate the debt to income ratios. We can see the account balances over a longer period of time to see how they utilizing the revolving credit. So it's not a whole lot of difference, but it's just more information that the lenders have on that.
Oh wow, good stuff. So, I mean, is it like more positive and helping borrowers, or is it going to hurt them more, or is it doesn't make?
It could go either way. Yeah, haven't seen any guideline changes on that yet. But it's just more information. If anything changes, then we have more stuff to look at.
Right. Oh, one more actually got here.
What's that?
Yeah. So someone's asking about the 1099s. So 1099 versus W-2. So like I've known people who've done contracting. So they're I mean, they're like 2-3 year contracts. Is nothing, not like you're a contractor, for 2 months. Is that any bit challenge? Is it any more challenging now, pre or post COVID, or is there anything that you can tell us about
I would say
1099 jobs?
yeah, that would be a bit
Realtors, for instance, would be another one.
Yeah, 1099 is basically self-employed. So
Okay.
the same guidelines apply. They look at last 2 years 1099s and tax returns. They go
Okay.
by the bottom line reported, the net income after expenses, just like any other self-employed. And with the new COVID guidelines, they want to make sure the business is stable and they have contracts going forward and P&L for this year to make sure they're on track for same or higher compared to last year. So the same, little more stricter guidelines on the self-employed buyers or 1099 buyers. It's pretty much very similar. So those are the ones we encourage to get all the documents up front, so we can review it, make sure they're truly pre-approved, and then that way they know exactly if they're ready to go now or if they need to wait a little bit to get that where they need to be. But that's a good question. You get a lot of 1099s and self-employed, especially in this area.
Yeah, no, no. Awesome. Well, again, thanks a lot, Shaheen, for joining us today and in your evening. And if we have any more questions, I'll go ahead and I'll maybe post them to the Facebook
Yeah,
chat here.
sounds good. Thanks, Ali. Thanks for listening.
Thanks a lot. Yeah, yeah.
Take care.
Thanks. All right. Goodbye.